The August producer price index inflation numbers came out slightly hotter than expected on a month-over-month basis, coming out 0.2% compared to 0.1% month-over-month. And then for PPI core, which is minus volatile food and energy, came out at 0.3% compared to 0.2% month-over-month. Year-over-year numbers for PPI came in line with expectations at 1.7% year-over-year, and then core PPI, which, as I said before, is minus volatile food and energy, came in at 2.4%. This shows that the producer price index inflation, which is the prices that businesses face, or wholesale prices or input prices, are slightly hotter than estimated on a month-over-month basis, which is more of a leading indicator than the year-over-year numbers. So that's something that we do have to watch. However, it's not hot enough in order to take away the need for a 25 basis point interest rate cut by the Fed next week. So I think that'll happen. And that's about an 85% certainty compared to a 15% certainty of a 50 basis point cut after these numbers. Traders are now seeing about 100 basis points of cuts by the end of the year. And I kind of agree with that. I think there'll be, at the very least, every Fed meeting until year end will be a 25 basis point cut with the possibility of maybe 150 basis point cut. Obviously, we have to see. There's some bullish momentum going on in this market. And I still think, and I said this in earlier videos earlier in the year, that I think that the tailwinds for technology and AI outweigh slowing growth fears. That was seen yesterday. You know, we saw that inflation for the CPI, consumer price index numbers, came in at 2.5%, which is good news, at least compared to July's 2.9%. However, investors are starting to think that just because the Federal Reserve will cut interest rates in next week's meeting, that shows that the economy is slowing and leading to growth scares and recession. I think that's far from the case, especially because the optimism of AI, and after Jensen Huang in the video with this podcast and webinar yesterday with Goldman Sachs talking about all the pent-up demand and long wait times for the Blackwell chips, they're scaling production, this year. They're scaling it into Q4 so that by 2025, these Blackwell chips should be ready. There's so much demand there. And once he was saying this, the market started recovering pretty substantially, which goes to show you that the optimism and all this pent-up demand about AI should counteract the slowing growth worries, in my opinion. So it was good to see that the tailwinds of AI and tech are stronger than growth worries and Fed rate cuts. So that's some good news. And then I also want to talk about some more bullish momentum in the short term for this market. Yesterday, the reversal was pretty strong. We were down about 1% in the market pretty much after the CPI inflation numbers were read and were public. And then after NVIDIA's call, the market was up, especially the NASDAQ was up 1%. That intraday reversal in the NASDAQ is pretty substantial. And the last time the NASDAQ was down 1% and then closed up 1% was October 13th, 2022. That was the day after the NASDAQ's bear market bottom. So there was a little bit of short-term pessimism in the NASDAQ. And then obviously after what we saw from October 2022, the market did, especially the NASDAQ, did substantially well since then. I think that's the case now. And the NASDAQ also performed better than the S&P 500 index for the last 3 trading days. So there's more risk on sentiment. Alternative energy stocks also did well yesterday. There's a more risk on appetite right now, and I expect the market should do pretty well right now ahead of next week's Federal Reserve meeting, because investors are optimistic that the economy is still strong and that the Fed's going to deliver a 25 basis point cut.